Welcome to another stock market weekly update. Today is May 19, 2019. In this weekly update, we will review the broad market indices and some key market segments. Last week, U.S. increased the tariff from 10% to 25% on $200 billion of China's import to the United States, and the stock market went down again, fearing a trade war escalation. All the broad market indices had a down week, with the Dow Jones Industrial down the least, losing 0.69%, while the Russell 2000 lost the most. It went down 2.37%. The index E-mini futures also went down, with ES losing 0.84% and the NQ down 1.29%. Before we start looking at the chart, I'd like to ask you to click the thumbs up if you like the contents in this video. If you are not a subscriber of my YouTube channel, click the subscribe and the notification icon to avoid missing any future video. The S&P gapped down on Monday and broke the 2816 support zone. Then on Tuesday, it went back up above the 2816 support zone, spent the rest of the week attempting to recover from Monday's loss, and closed the week near the 2860 support zone. For next week, if it can stay above the 2860 support zone, then it could make another move back toward the 2898 resistance zone. Otherwise, watch it move down to retest the 2816 zone, and if that fails to hold, then the 2738 support zone could be in play. The Nasdaq 100 also showed a similar price action as the S&P 500. It gapped down on Monday, but it held above the 7205 support. It spent the rest of the week recovering from Monday's loss and closed the week near the 7505 support. If it could hold above the 7505 support level next week, then it could make a move up to the 7672 resistance zone. Otherwise, we could see a retest of the 7205 support, and if it fails to hold its support, then look for the 6836 support be in play. Now, looking at some market segment, we start with the crude oil market. Crude oil held the expanded channel lower trend line near the 60.39 level, and it bounced it up to the 62.95 resistance. If it could hold above the 62.95, then look for a move back to the original price channel and the resistance near 65.74. If it fails to move above the 62.95, then look for a move back to test the 60.39 support. For the gold market, gold has been trading in the 1269 and the 1325 trading range. Last week, it broke the descending trend line, only to see a drop back below the trend line and toward the 1269 support. If it could hold the 1269 support, look for a possible long setup for a swing up to the potential resistance near 1325.20. Otherwise, look for a possible move down to the 1245.30. The semiconductor continued to slide down ever since it broke down from the price channel and broke below the 112 support. Last week, it closed near the weekly low. We'll be watching for a continuation move down toward the potential support near 99. The financial made a failed breakout above the 2752. It attempted and failed to get back above this level. It spent last week chopping around the 50-period moving average. We'll be watching for a possible move down to the potential support near 25. As you can see from this week's stock market review, there are still a lot of uncertainties in the market. And as the trade dispute between U.S. and China remains unresolved, the semiconductor market will continue to be under pressure, as well as with other segments that rely on China's markets, such as autos. As the U.S. economy starts to weaken along with the global economy, the stock market will likely experience increasing volatility. And the increasing tension in the Middle East, specifically with Iran, one could see dramatic move in the oil and gold market as geopolitical events unfold. So be cautious and good luck.